Hi, everyone, and welcome to another episode of Living on Blockchain. Today, we are speaking to Chris. Chris is the co-founder and VP at BVNK. BVNK is creating the world's largest crypto stablecoins infrastructure, payment infrastructure. It's a global payment platform, and it services financial entities and fintechs who are trying to perhaps add stable coins to how they receive payments. This is a very, very insightful conversation, I would say, for people who are perhaps looking to build in the payment space, who are working with stable coins, and even just folks who are curious about Web3 and crypto, and they are perhaps looking to get into the space via, the lowest hanging fruit, which would be stable coins. So I can't wait for you guys to hear this. Very pumped up after this conversation. Let's deep dive right in. Hi, Chris. Thank you so much for joining me today. How are you doing?
Hi, Tarusha. Thanks very much for having me. I'm excited to have a conversation with you.
Likewise.
No,
Can you tell us a little about how you started your career? You started your career in traditional finance, and you worked in equity and FX markets. What initially attracted you to the world of crypto and blockchain?
yeah. So as you mentioned, I actually had a TradFi career before
Hmm.
entering the crypto space or falling down the crypto rabbit hole. But it was really across different trading desks, and most of that time was spent on an FX trading desk. So I think
Okay.
spending time on an FX trading desk, naturally Bitcoin kept popping up on our Bloomberg screens, and we'd debate, extensively about like what is this new currency, given we were obviously currency traders.
Hmm.
And I think we would debate the merits of it and this sort of thing. But to be perfectly honest, I never really dove in until probably about 2016. And
Okay.
really, what intrigued me was sitting on an FX desk doing large FX transactions for multinational corporates, and then watching the difficulty to actually settle the money. So I send that payment so that customer could get their euros, their dollars, or their South African rand settled. And then looking at this kind of immutable blockchain ledger that works 24/7, and that really got me thinking about kind of using the blockchain for payments. And that kind of coincided with a bit of an interest in stablecoins and that sort of thing. And that's really how I made that transition. And eventually I left banking and TradFi, and actually set up a hedge fund with my ex-business
Okay.
partner.
Hmm.
And we very much approached crypto as this kind of new asset class to invest in. But I was very much always interested in the kind of the payment side of it. And as we started building that hedge fund out, we were using active users of stablecoins to move money between different exchanges, to do arbitrage trading strategies. So I was arguably an early user of stablecoins, but given the FX and payments background, it all kind of made sense to me. So that was kind of the journey into crypto, and how it led me into kind of the stablecoin space.
Okay, so that's quite a organic journey, perhaps. You were working there, and this was something that kept coming up, so you decided to make the leap. So, how has your background in equity trading and asset management helped shape your approach to building, the platform that you're working on right now, BVNK?
Yeah, so I mean, I guess I got baptized in how the traditional payment system doesn't work and doesn't operate 24/7,
Hmm.
365. It's got a
Yeah.
lot of intermediaries and a lot of cost built into it.
Yeah.
So,
Yeah.
at least understanding at its core how traditional payments worked, and then thinking through how, payments could work on a blockchain, it obviously gave me a lot of insight into, how could you set something up like this? And naturally, like as you mentioned, it might have been an organic journey into blockchain. But when we started looking at the space, stablecoin market cap was 3 billion. Like, no one was really using stablecoins for anything
Right.
else but trading. So that
Yeah.
payments use case was very new. And I think it just made a lot of sense. And then the more you spend time in it, the more you realize what you can use stablecoins for. And our firm belief is that blockchain will become a new core payment rail. And we're trying to bring that future into existence by building and building BVNK.
Right. So would it be right to say what you're building is like an infrastructure basically for providing stablecoin payments. That would be a good way to summarize what you guys are doing.
Correct. I think we're definitely one of the largest stablecoin infrastructure providers in the space. But at our core, BVNK is a global payments platform, and we're building this stablecoin infrastructure that enables our customers, which are businesses and fintechs, to send, receive, store, and convert stablecoins, but also traditional fiat currencies across a variety of domestic and international traditional payment rails, but then also blockchain rails. So it's really sitting at that intersection, bringing bank rails and blockchain rails together and creating that interoperability between the old payment systems and what we deem to be a new payment system, being stablecoins on blockchains.
Okay. All right. Okay. This is wonderful. It's good. I think it is a big pain point. So is this particular, are you open to platforms integrating with you as well, or is it just primarily for institutions?
We're by design a multi-stablecoin platform, and we've got a bunch of different customers. So we enable three core use cases. So one is that stablecoin pay-ins use case. So these are actually big platform businesses like large CFD brokers and FX brokers that have platforms and many users trading on those platforms. We enable them to receive a stablecoin pay-in as a means to deposit into the platform. We then also serve big companies for the stablecoin payouts use case. Think global payroll platforms like Deal, doing stablecoin payouts to the emerging market contractors. Think marketplaces paying out sellers. So very much a mixture of fintechs, traditional businesses, but largely fintechs, other payment companies, PSPs, and that sort of thing. So a whole host of underlying businesses that we offer these new payment rails, or the interoperability between these two new payment systems.
Okay, so that kind of takes me to the next question, which is to do with perhaps the compliance aspect of it. What are the geographies that you're available in? What are the kind of jurisdictions that you're not servicing right now? And what kind of compliance hurdles have you had to face so far? Because I'm sure that there must have been quite a few there.
Yeah, so we've naturally been building the space for quite some time, north of 5 years now. And so we've seen it all from the early days where there was no regulatory frameworks in any markets to, things like Mika coming to market today. But we very early on made a strategic decision to be one of, if not the most regulated stablecoin payments or crypto payments provider in the space. So we have multiple different licenses across the fiat payment stack. So we have payments licenses in the UK and the EU, which are called e-money licenses, which allow us to access, fiat payment rails. And then we also have crypto asset licenses across the EU, the US. We're getting one in Singapore, which really helps us to
the
be
Singapore
fully regulated.
One is really hard to get. So congratulations on making that happen.
It's not there yet. I spent 6 months in Singapore last year getting the license application in, but it's moving forward, and we're really excited about it. And it's a very good license because it allows you to do the stablecoin crypto side of things as well as the fiat things in the same entity and through the same license.
Right. So it's very coveted, and that's what I'm saying, that kudos to you guys for at least getting the application move forward, because many big shots have tried and failed in Singapore. That's wonderful to hear. That's very exciting. Please go on.
No, exactly. So we're quite proud of our licensing status across the world, and by being given, if you think about what we're trying to do is really bring those banks and blockchain rails together. We need to be fully regulated on both the fiat and the crypto side. So by getting all these licenses and building out our compliance and financial crime teams, because of the regulations that we need to adhere to, I think we've set ourselves up really well to operate at scale in a regulatory compliant way, naturally. And some of the new things like travel rule coming in and that sort of thing, we again well prepared because we've been operating on the fiat payment side for some time through those fiat licenses. So I think getting the right talent, getting the right licenses, making sure you operate those licenses in the right way, and cover most of the globe through our EU and UK licenses, for Europe and the UK. Our US licenses, we're getting MSBs across the US as well. And then obviously, hopefully in time, that Singapore one to cover APAC. I think we're well covered on the regulatory front.
Brilliant, brilliant. And wherever you have these licenses, I'm assuming that your services are readily available for institutions and entities alike and registered in those jurisdictions.
Correct. So we serve a global merchant base by
Hmm.
design.
Okay.
We are obviously we don't serve, any sort of sanctioned countries or anything
Right.
like that, but we've
Yeah,
obviously got
that's
our
very
own
standard.
internal,
Yeah.
yeah, our own internal risk policies, and we serve, global merchants through, any one of those licenses, depending on where that merchant is based.
Right.
But payments is a global business. We've been building a global payments platform, hence the licensing, strategy, and yeah, so we very much pride ourselves on being able to serve most customers in most markets with most of our use cases. It's probably the best way to put it.
Hmm. Okay. So, because all kinds of people kind of tune in to living on blockchain and to listen in, if you had to tell me the difference perhaps between, so I think people might confuse your platform with a on-ramp, off-ramp sort of a platform. Can you perhaps shed some light there so that they understand that there is a distinct difference there as well?
Sure. So, I mean, I think in the traditional on-ramp and off-ramp sense within crypto, it's very much focused on kind of consumers buying crypto
Hmm.
with fiat.
Yeah.
We're very much a stablecoin infrastructure provider. So we actually enable fintechs, traditional fiat fintechs, or even crypto businesses with a full payment stack, whether it's a stablecoin payment stack or a fiat payment stack. So there's obviously the element of moving between a fiat currency like dollars, euros, or GBP, and any multiple of the stable coins that we offer. So there is that element to it, but we're very much an infrastructure stack that enables businesses to launch stablecoin payments use cases, come up with new use cases and take those to market running on our infrastructure. So we very much serve consumer facing fintechs, but do not serve consumers directly. So
Hmm.
we enable, let's say, a cross-border remittance company to leverage stablecoin infrastructure, wallets, payments to get better at moving money from point A to point B. But they would have
Yeah.
that relationship with the end user.
Right. Yeah, I think that that is a wonderful way to point at the distinct difference. And thank you for sharing that. So now, I would like to talk a little more about the other kind of challenges that or maybe surprises perhaps that, when you made this, first of all, this transition from, traditional finance to building in Web3, and then, building the solution itself. And why I'm asking this is because we've talked about compliance already, and compliance usually is one of the bigger challenges when you're building on the infrastructure side of things, especially with a global payments platform like yours. But other than that, what are the kind of challenges you can talk about personally from, because you made that transition, and then vis-a-vis the platform as well when you were building it, and how did you overcome them?
Sure. So I think it's the biggest step change, I would say, coming out of traditional finance into Web3 and building in Web3 is just the speed and intensity, that you
Yeah.
need to build at, especially to just will an early stage startup into existence.
Mm,
And given the speed at which the crypto market moves, I'd say it's probably a little bit even faster than, let's say, traditional fintech. So you've obviously got
mm,
traditional businesses, financial
mm,
institutions. You've then got fintechs who are moving at a much faster pace and trying to innovate. And then you've got the crypto market, which is like arguably a subset of fintech, moving at even faster pace. So I think adjusting to that intensity, and then obviously just building startups are pretty hard. So you just got
mm.
to have staying power and
True.
resilience to keep going.
Yeah.
And then to the question around some of the challenges with building the platform, I think
Mm.
because we've been around for 5 years plus,
Right.
in the early days, there was no real custody tech providers or that sort of thing. So we had to
Right.
build some of the early infrastructure bits that you could buy off the
Right.
shelf today as a SaaS product. So I think
Yeah.
that was probably an early challenge where you'd need to have a liquidity engine, to plug into multiple places to source liquidity. You would need to have a custody engine running your own security modules. You need to do your
Mm.
own hot and cold storage. So all of those
Right.
pieces, we had to learn how to do while building, at speed. When those solutions weren't there, obviously it looks very different today. There's multiple different options to choose for all of those different, I guess, pieces of infrastructure. But we've obviously managed to build our platform, own the tech, own our entire crypto stack. We've actually unbundled that crypto stack into a product we called Layer One, because of all the learnings that we had of building this ourselves and specifically building for payments use cases. So I think it was
Yeah.
really early days, just lack of some of the tooling that you would need. And then we had to build
Right.
that in-house. So I think if you had to rebuild from today, there's probably several off-the-shelf solutions you could knit together. But I think it's actually held us in good stead longer term, given we own the full stack.
Right, yes. No, I completely empathize with this particular challenge. I think I'm working on a decentralized social network, and I've been around for a while as well. But when we started really working on this decentralized social network, wallet abstraction, chain abstraction, they were not a thing. So we were thinking of we were basically finding our own way and tinkering with things to make it more, happen more quicker. But then obviously this new tech came around, and that kind of did help us in expediting how we were sort of building, and it obviously makes the journey easier. But then good for you guys. You've been around for 5 odd years, and you really got the foundation right before you actually started building and scaling.
Correct. John, I think you have to tinker and get those
Yeah,
foundations built because you need that scale. You need, specifically in payments, you need that system to be doing tens of thousands, if not
absolutely.
hundreds of thousands of payments a day.
Yeah. Yeah, no, no, absolutely. Because otherwise you're carrying the debt, right? The debt of the platform that you might have, the tech that
Correct.
you're carrying for your product, and that kind of compounds. So I completely agree there with you. So can you tell us a little about the kind of traction that you guys have seen so far?
Um, yeah, so the business is doing, like I mentioned, we're one of the biggest players in the space. So we're doing
Right.
north of 6.5 billion in annualized payments volume. All of
Yeah.
that is touching a stablecoin in some way, shape, or form. That is split across those three use cases. One being stablecoin pay-ins, another one being stablecoin payouts, and then we have stablecoin settlements, which is more of a B2B transaction. Think of
Hmm.
a PSP settling a merchant in stablecoins and these sorts of
Okay.
use cases.
Right.
We're about 240 people in the business today, London headquartered, offices in Bulgaria, Barcelona, as well as one in San Diego in the US, and then a big one in Cape Town. Myself
Hmm.
and my co-founders are also originally South African, so we still have a decent sized office in Cape Town. Like I said, multiple different licenses, north of 200 customers. So yeah, and then on the back of a successful early success of the business, we raised a $40 million Series A in 2022, which Tiger Global led. So we've been using that Series A money to keep growing the business, and have doubled the business since then.
Wow. Yeah. So, I know of all of these numbers. I'd studied you guys, but I wanted to give you guys a chance to really highlight it because I feel this is so important that in Web3, people keep talking about noise and how platforms are not really creating solutions that are being used, perhaps. You guys are a stark example of how, great solutions can be created, and they will see amazing, fabulous TBLs pretty much at par with their Web2 counterparts.
Yeah, no, for sure.
So, can you tell me a little about? I know you guys are one of the biggest, blockchain-enabled payment solutions, but can you talk to me a little about the USP of the platform, perhaps? What sets you apart in this space?
Yeah, so I think we found, as we've gotten bigger and the scale's gotten bigger, and specifically more traditional fiat fintechs and fiat payment companies are starting to look at stablecoins. Arguably 2024 has been the breakout year for stablecoins. You can see this across the market with good pieces of regulation coming in. Many of the big fintechs like Visa doing more and more in the space. WorldPay doing things in the space as well. So I think it's been a great year for stablecoins, and we were uniquely positioned on, I
Hmm.
guess, three fronts. One is those licenses, and that regulation that we've built over the last 5 years. That takes some time to get right and operate these licenses, not just get the licenses, but also operate them at scale. So I think that sets us apart. We also have enterprise grade security and infrastructure, which is obviously super important for global, some of the world's biggest payments companies starting to enter the space. They want someone that's got ISO certificates sorted, takes security and data security seriously. So I think that's holding us in good stead as well. And then, I think because we are, by design, bringing, banks and blockchains together, we We support multiple different stablecoins. So we're a multi-stablecoin platform on multiple different blockchains. And then also, the core G3 fiat currencies like Euro, GBP, and dollars on their local domestic payment schemes, and we've included Swift in that infrastructure. So you really do get this really do get this platform that allows you to easily bridge between the traditional historical fiat payment systems and this new stablecoin payment system that's quickly developing. So I think that's really set us up to win some of the bigger customers in the market, and hopefully we keep going from success to success. But the pipeline's also looking pretty good, so we're quite excited.
Yeah, this is wonderful. This is all very exciting stuff. You guys have recently launched, you mentioned it, Layer 1, which is a self-hosted, self-custody digital asset infrastructure. But can you tell us a little more about it? What inspires this development and how it kind of benefits businesses in terms of control and privacy?
Sure. So as I mentioned, when we started out, it was very difficult to get a custody tech solution off. Fireblocks was just starting out. A couple of the others weren't really, ready to go. So we, over the years, have used a mixture of our own crypto infrastructure plus, third-party, solutions. But we really realized that those third-party solutions were not really optimized for a high-performance payments platform. So what happened was we effectively, got our best engineers and our CTO, Don, locked themselves in a room and rebuilt our entire crypto stack. And we unbundled that stack as a standalone custody tech solution that fintechs, crypto businesses can use to enable, seamless stablecoin use cases. So it's really a custody tech platform which enables payments use cases at scale, but has multiple, features like auto consolidations across different blockchains into asset pools. You can trade. There's a smart auto router that kind of sources best execution to get in and out of those stablecoins against fiat or other stablecoins. So there's a bunch of different modules on top of the wallet and security module, which obviously comes standard with custody tech solutions. I think what makes it slightly unique is the way you deploy that system. Obviously all of these custody tech solutions are non-custodial, so you own your own private keys, no different with Layer 1. But crucially, we allow you to deploy in your own AWS environment. So you control your own data, you have that data privacy, and then you have the non-custodial aspect of it, which I think is something unique in the market today. And for those very security forward fintechs and large enterprises who want to own that, it's landing really well.
Right, I would imagine so, because this kind of really puts control and privacy forward for entities. And I think especially fintechs would be eager to perhaps not having to rely entirely on an infrastructure which they cannot really control. So I would imagine that this
Correct.
is, and I would also think that this is probably first of its kind, because I haven't heard of something like this before in the space.
Yeah, I think that there's very few full on-prem deployments, in the custody tech space. Some of them are like a hybrid SaaS where it's a SaaS model plus a little bit of your own deployment in terms of the security module, but like a full deployment in your own AWS environment. It does seem to be unique in the market, so we're quite excited about it.
Excellent. This is brilliant. I think more entities and fintech should be looking at this. Absolutely. Now, I want to touch a little about, PayPal integrated USD, basically. You guys have integrated PayPal USD into your platform. How does this integration really enhance your offerings? And what kind of impact do you see it having on the adoption of stablecoin payment? Do you think, or have you seen so far that this kind of increases the ambit and more entities are jumping on the bandwagon?
Yeah, so we're obviously a multi-stablecoin platform by design, as mentioned earlier. So looking across the space and supporting the stablecoins that firstly customers want. So we've let customer demand as well as liquidity drive which stablecoins we support. So we support all the major stablecoins today. PYUSD is obviously one that we integrated more recently. I think, to your point, what does that really do for the payments landscape? I think, one of the OG original fintechs, with 420 million accounts, so a massive distribution network, coming into the stablecoin space and taking that bet and launching their own stablecoin. just shows, those payments use cases are real. And, having a digital dollar moving around on a blockchain, whatever form that takes, whether it's Tether, USDC, PayPal, USD, is something the market wants. And, something the market needs, I guess, to solve some of these challenges in payments. So we were quite excited when PayPal, obviously pulled the trigger and entered the space with their own stablecoin. And we're looking forward to partner with them to bring, PYUSD into more of the stablecoin and payments use cases that we enable today. So I think it's uptake's been good across there. Stablecoin, PYUSD has obviously also been growing and recently reached $1 billion in market cap. So they're doing some great things on their side as well, and we playing a small part in helping that stablecoin grow.
Yeah, this is wonderful. I think, like you said, this is the OG platform, and the distribution is very sorted there. So it obviously makes sense that, considering you support multiple stable coins environment, then this is like the organic next step, I think. But now I want to go a little philosophical, perhaps, and or just personally, why do you think stable coins matter? How do you see their role in transforming the global payments landscape? And I ask this especially in the context of Web3, because a lot of people are not for the idea of centralized currency pegged uh, crypto. So what is your take on that? Like, how do you feel about this particular set of people who are not for these kind of coins, and they don't see that, they feel that this goes against the ethos of Web3?
Yeah, I mean, I think, we've been on this mission to
Hmm.
really accelerate the global movement of money, and
Right.
stable coins themselves will change the way that money moves today. And it's really by replacing the underlying rails, that core infrastructure that hasn't been upgraded in many, many decades. And that really is just good ultimately for the consumer. If you look at consumer, I think the last stat I saw on, like, what is the average remittance cost across the world for certain corridors, it's like 7%. I think stablecoins can definitely bring that down to 1 to 2%, because of the reducing payments complexity, reducing the number of intermediaries in the payments chain.
Hmm.
It's really this infrastructure that allows the messaging, i.e., sending the message with that payment, and the settlement to happen together at the same time, which is not how payments works today. Today, those move separately. There's the message that gets sent, let's say through a system like Swift, and then the
Hmm.
settlement of that money happens, 2 days later, or
Right.
asynchronously. Whereas
Yeah.
blockchain is really an infrastructure that enables that message and that settlement to happen together. So I think it's probably, stable coins and blockchain and stable coins on top of blockchains is definitely an innovation at the core infrastructure layer of payments. So I personally think that stablecoins today is crypto's killer app. It's really where the actual use cases are happening. I think there's a lot of work to do on reducing costs even further, getting more different stablecoins and other currencies on chain. So I think, and I mean, if you go back to what I would say to those to the people in Web3 that look at stable coins and say, look, it's got one foot in the traditional financial system. I mean, I guess two things I would say. One is there's no way that this technology replaces the existing infrastructure today. This will we have a full belief that these will coexist and be, and therefore we are building to make these two systems interoperable.
Right.
And then I would also say, if you just go back to Satoshi's white paper, in the Bitcoin white paper, he says peer-to-peer electronic cash. So
Hmm.
effectively,
Hmm.
blockchain was birthed to do payments, if you want to look at
Right.
that way. So from a philosophical Web3 standpoint, I would still argue that, that payments is really the killer app.
Right. Yeah, I love how you bought that peer-to-peer cash. I think that is very true. This was always built on that particular foundation. So, your answer gave me something to think about. I have two questions that have come from right there, but one is that which I want to ask first. You had commissioned a report recently, I think, on the economic impact of stablecoins, and this is something that I had read in my research. Can you share some key findings from that report? Because we are talking about how stablecoins are pertinent in moving the economies forward, the global economy forward.
Sure. So, obviously we hyper focused on real world use cases of stablecoins in payments. That's kind of our core business. Those are the use
Right.
cases we're enabling. So we partnered with a CEBR, which is a research body, economic research body in Europe, to commission a report where we spend a bunch of time thinking through and trying to calculate that economic impact of stablecoins on global economies. And I mean, I guess the three key findings to summarize it was really around stablecoins are being used globally, specifically in emerging markets, to mitigate the cost of currency volatility. So I'm originally South African. ZAR is traditionally, so the South African rand is traditionally a currency that depreciates and has depreciated against the dollar. That's obviously very difficult for South African businesses if you're paying dollar invoices. Same thing in Brazil. Same thing. Look at hyperinflation sort of scenarios in Argentina. So when you have a currency that's by design due to poor economic policies or that sort of thing, depreciating against the global reserve currency being the dollar, it's really difficult to to kind of plan ahead. So you have to do all sophisticated hedging, and most businesses and individuals are not able to access that. Those are really only multinational corporates that can access that level of sophistication in terms of hedging. So we're finding that stable coins are being used as a way to mitigate this currency volatility, i.e., using their local currency to buy a stablecoin and holding on to that until they need to settle a dollar invoice. So that was one of the key findings. Another one was it's really bridging the dollar gap, and what we mean by that is it's very difficult for emerging market consumers to get their hands on a stable currency if they are in a market such as South Africa, Argentina. We've seen this across markets where the government tightly controls the access to dollar flows. And therefore, I think in Argentina, you can buy $200 a month of actual dollars. So you can't even protect yourself as an individual against this because there's just no way to access dollars. So a digital dollar gives anyone with a Web3 wallet and a cell phone access to these digital dollars. So it's bridging that dollar gap. And then the last one, which is akin to how traditional payment systems work today. If you think about how payment systems work today, it's a network of bank accounts around the world that holds pre-funded capital to make sure that you get the look and feel of an instant payment. But the payment doesn't actually move instantly. It's just people have put money in multiple different accounts around the world to be able to pay out when someone pays in someone pays in the US and you pay out in the Philippines. So that amount of capital, we call it trapped capital in the system. So think about it like, capital trapped in the pipes, in the plumbing, in the payments plumbing of the world, And by using a stable coin, which operates 24/7, 365, and near instantly on some of the high performance blockchains like Solana, you no longer need to keep this pre-funded capital sat in accounts, normally not earning interest. You can actually do real-time payments 24/7 to wherever that money is needed in a fraction of a second. So it obviously releases a significant amount of capital that's stuck in this payments infrastructure around the world. And, companies can use that capital to reinvest in their businesses, focus on higher growth projects and that sort of thing. So there's a significant economic benefit to getting your hands on capital that's been trapped in multiple different accounts, specifically for payment companies and fintechs,
Absolutely, I would imagine. So these are very interesting insights that you guys have unearthed in this particular report that you guys have generated. I think this will give me and our listeners a lot to think about, especially folks who are perhaps looking to build in the payments space. Now I want to ask you something again that came from your last answer. You guys have you mentioned how you feel that one is not going to stop existing. That is why we are trying to bridge the gap between banks and Web3 technology. So do you think that banks are now perhaps more open to adopting blockchain on a larger scale? Do you think that eventually all banks will do it?
Yeah, I think banks, there's some innovative banks early on that have been quite deep into blockchain. You've got banks like Standard Chartered, which has a custody as well as a market maker business in Zodia Custody and Zodia Markets. They have SC Ventures, which is investing across the space. So I think banks are at various stages of dipping their toe in. Some have gone, let's say, put a whole leg in already. Some of them already half up to their waist. So I think
Right.
you recently saw BBVA, which is one of our core banking partners, the big Spanish bank. They are going to be partnering with Visa to launch
Yes. Yes, I read that.
to tokenize deposits. So I think
Hmm.
banks are moving into the space, and it's happening in an accelerating pace. So
Hmm.
obviously, early days, no one really wanted to touch it, and you would have to do payments with a fiat stablecoin. Fiat, some people call it the stablecoin sandwich. Where you kind of have stablecoins in the middle, more just as the rail. As the market has opened up, and consumers and fintechs and payment companies are willing to touch and use and interact with stablecoins because of businesses like BVNK, which give them the infrastructure to do that. And then again, bridge between banks and blockchains, as you mentioned. I think banks are waking up and saying, look, if we don't get involved, fintechs are going to eat our lunch, and this, I think, many of them can see is the future of payments. And what were they originally set up to do besides lending? It was really to make payments. So those were their two core
Hmm.
business activities. So I do think we're seeing banks enter the space at an accelerating pace. I think
Hmm.
certain markets are struggling a little bit in terms of regulatory clarity, the US being obviously the biggest one, where it's still pretty difficult to get banked as a US, banked with a US bank account as a crypto
Right.
company. I think that needs to change, which will open up more innovative products, and the speed and the growth in the space would be able to accelerate further. But then you see places like Europe bringing in regulation like MiCA, which has basically given banks a way to, cool, the space is fully regulated. You as a crypto company, I can give you a bank account. I can interact with you because I know you regulated at the same level of MiFID, basically. They basically used MiFID, which was a banking regulatory regime that came in after the 2008 crisis. So they've used that to really architect their MiCA framework. So,
Hmm.
I think certain markets are, Singapore's got a great regulatory regime as well as a license. So I think, there's different countries moving at different space, at different speeds, and there's also different banks moving at different speeds. But overwhelmingly, I think almost all banks will be involved in stablecoins within the next 10 years in some way, shape, or form.
Hmm. Okay. And I feel that this is recent, like in the last 3, 4 years, right? This has changed. Earlier they wouldn't even touch it with a 6 feet long stick, I think.
No,
Everybody
you're
was very
100%
iffy.
right.
Yeah, but
100%
this
correct.
has changed. What do you think brought about this change? Like, do you think it was the financial crisis, that or is it the geopolitical factors? Like, what would you say has changed the perspective, or is it just adoption that users are looking at it, so banks are also looking at it? What would you say
I
is the
think
reason?
yeah. No, it's a good thing. Like, how did they go from not looking at it to being, some of them half in, basically?
Hmm.
It's very much been two things for me. Like, I think the number one thing was regulation. So, like I said, clearer
Okay.
regulatory
Right.
frameworks allows a bank to operate and
Right.
onboard and serve a crypto customer, or themselves look at crypto solutions because their bank regulator said, okay, cool. If you get XYZ license, you as a bank can operate in the space or serve crypto customers. So I think that's been
Right.
the overwhelmingly the most beneficial thing for crypto companies and just the space more broadly. And then secondly, to
Hmm.
your point, user adoption. We're seeing
Hmm.
significant end user adoption in emerging market countries, based on, like I said, bridging that dollar gap, hedging them against currency volatility. These sorts of things are driving young, tech savvy populations like Nigeria, like South Africa, like, Argentina, to look for solutions to the problems they find, being, currency runaway inflation. So those end users are adopting it. That means that the businesses who serve those end users are starting to adopt it or bring those solutions to market. Therefore, the banks who serve those businesses or those
Hmm.
consumers are starting to be pushed into it, or at least taking it seriously and looking at solutions. So I think it's a combination of end user adoption, business adoption, so adoption overall, and
You're
then
right.
that regulatory clarity that's really pushed banks into the space in force, I
Yeah.
would argue, over the last 18 months.
Right, yeah, absolutely. I think the kind of, like you mentioned, they seem very gung-ho and optimistic about now adopting to this. And earlier, like I've built in fintech, and I have built in Web3 as well, and I know how difficult it was. And probably so around 2016, 2017, this is like when I had co-founded one of the first Ethereum exchanges of India. And there was like a overnight order that came from the central bank almost in 2017 or 18 that prohibited banks from dealing with, companies that are dealing with crypto in any way. So from
Yeah.
there to here, I think we've come a long way.
No, for sure, sure. Yeah, the good old days where you couldn't get a bank account. Now you can get a bank account in most markets, but in
Yeah.
the US, it's still pretty challenging.
It's still, yeah, no, I think even in India, it's still a bit of a challenge, but there are platforms because, there are platforms like Mudrex and CoinDCX, etc., that are trying to change this a little bit. But I do think that has happened primarily because the government introduced taxation. So, they are taxing crypto earnings and transactions, and that is why perhaps these platforms are
Mm,
still able to function because and deal with banks. I think that it kind of gives it a layer of legitimacy perhaps. I think that is the perception that kind of gets built.
yeah.
So I believe, yeah, that answer is absolutely right. Now as an entrepreneur, I'm curious, because you're building in the B2B sort of space. How do you scale a platform like BVNK? What are the kind of key strategies that you guys have executed that are responsible for the rapid growth and success of your platform? And I'm curious as an entrepreneur, and I'm sure other builders would love to hear it as well.
Yeah, look, I think it's been an amazing journey. So from
Hmm.
five of us in a WeWork in Cape Town, pretty much, with
Right.
our CEO Jesse and my co-founder being in London, we started
Right.
building this business out. And I think a couple of ingredients, is like, Don, our CTO, is a wizard from the infrastructure side. So effectively getting those basics right, like we discussed, like getting that infrastructure set up from day one. Obviously you have to, as you scale, you've got to cut a few corners, but making sure that you don't let the tech debt build up too much. I
Hmm.
think secondly is probably the key thing for us has really been the talent density in the business. So we've been pretty relentless on getting the best people into the right seats at the right time. Um,
Hmm.
and by bringing those, really good people in, trusting them and allowing them to, show what they can do, magic tends to happen. So I think that's been
Right.
one of the keys to our success. Is really that talent density and the continued focus on talent and developing talent and helping them help the business and build the business. And
Right.
then, I just think what is understated, I would argue, is just speed of execution. So many people can come up with really good ideas, and we've got a lot of ideas, people, including me, in the business. So it's, I guess, balancing finding new ideas. So I let's say 20% new bets, like where the market's going, making sure that you're taking customer feedback, testing new products. But once you find product market fit,
Hmm.
really being able to go at speed and scaling that by adding, better tech, better people, more volume, anything you need to do to get to that product scale quickly, I think is quite important. And the quicker you can scale, the better, and that just takes relentless focus on execution and that sort of thing. So I think a lot of the time it's underrated how much execution matters in a startup. There's many ideas around floating around. Ideas are a dime a dozen. I would say there's a lot of,
Yeah.
it's really execution where the rubber hits the road.
Absolutely. I think execution is what matters, and the pace of the execution matters. The timing should be right.
Exactly.
A lot of sorcery goes into these things, but at times just having a level head and doing what works and doubling down on what works, I
Correct.
think can be like the secret sauce of success.
100%.
Now, considering we are at the mostly at the end of this but very interesting conversation, I must say. But I would like to ask you one or two more questions. I would love to get your take on perhaps the new concepts and trends in this space that kind of excite you for their potential to disrupt the payments market. Like, is there any trend? Is there any particular platform or something that you feel that okay, this has the potential to really change the global payments market, but obviously perhaps it is too early and they might not have found a PMF yet. Is
Mm.
there anything that you have your eye on like that?
Yeah, for sure. So I've definitely been thinking about over the last 12 to 18 months, like what a fully on-chain FX, what full on-chain FX looks like. So what I mean by that
Mm,
is, today most of the world, well, the stablecoin market is 99% pegged to the dollar. If we look at global trade flows, 70% of global trade flows are actually in USD. The other 30% are spread across euros, GBP a little bit, you obviously Hong Kong dollar, some of the G7 currencies. So if you can bring, non-USD stablecoins on chain. So obviously they in varying forms. There's a Euro stablecoin, there's an AED stablecoin out here in Dubai, where I'm actually based. There's a single SGD stablecoin, there's an IDR stablecoin. So if you can bring non-dollar stablecoins on chain, then you get, and the market no longer resembles 99% dollars, USD pegged stablecoins. You can start doing full on-chain FX. And what that really means is every leg of that transaction can be settled instantly on a blockchain. So you can, go from fiat into stablecoin through a direct mint or burn. You can then execute or trade FX from $1, let's say USDC against XSGD instantly. You can then, settle that, send that, settlement instantly as well. And then you can get out of that back into the fiat world if needed. But I don't even think, you really need to get back into that fiat world. So there's a world that I see where, on-chain FX, if we get enough non-USD stablecoins on-chain and enough volume and liquidity into that market, where you can actually just do away with traditional payment systems and really, do payments completely on-chain. So, that's
Wouldn't
obviously
that
something
be
that,
wonderful?
yeah, that's something I'm really excited about. But like I said,
Yeah.
I know that that's a future, far in the future, basically. So what we're trying to do is make sure that we keep building at this intersection of bank and blockchain rails, and
Right.
at least make, at least start bringing this future into forward slightly, and make it a reality by making the fiat and the traditional payment systems and the blockchain payment systems interoperable. And in time, as more of these local currency stablecoins come on chain, there's more interesting use cases that pop up, like this on-chain FX piece.
Yeah. No, this is wonderful. And obviously, I think this is it's such a, if just to sit back and think about it, I think that is enough for me to get excited. Like a future like that, where all of these transactions are happening on chain, it'll make everything so much more efficient and I think
Correct.
transparent, right? I think that is the way we should go. So I
And
do think,
cheaper, which I
yeah,
think is a
yeah,
key thing in
exactly. It's
payments.
very important, right? Because there's so much
Yeah,
inequity, especially when you are doing, especially in sending remittances, right? The
correct.
fees kind of changes depending on which country you're sending it to, and that I think is almost cruel. So absolutely, this is something that you and I are both rooting for. Now, to ask you two more questions before we wrap it up, what will be your advice for perhaps folks who are looking to build in the payments system? What is one lesson or insight that you'd like to share with them so that they can also take heart and build in this space?
I think, the number one piece of advice I would say for anyone trying to build a
Mm,
startup, whether it's in payments or fintech or anywhere else, is
mm,
really like learn how to become relentlessly resourceful. So, obviously
right.
there are tons of different, problems that you need to solve that come at you each day. And you just
Mm,
have to figure out how to solve these problems. So if you have some smarts, a great work ethic, high energy, but crucially, you can learn how to, just get stuff done or solve problems. You can then keep that momentum up. And, as we mentioned earlier, speed and the momentum that speed drives is really the key to success, I think, in startup building.
yeah, and that kind of works across any domain, I think. The speed and just
Mm,
sort of ensuring that you're persistent enough. You have a thick skin. I think that is very important as well, because you'll face failures, and as long as you're moving forward, I think you're just figuring out what doesn't work, and eventually you'll find ways that will work, and you can build your success.
correct. 100%.
Okay, so to my last question, Chris, this has been very insightful. Thank you so much once again. But this is a question I ask everybody who comes on the show, and I would like to ask you as well. You made a leap from traditional finance to Web3. Uh, you talked about how this was a bit organic for you, and it seemed like a real problem that you wanted to solve. But what if somebody perhaps is dealing with this dilemma that they're working in the traditional space and they're looking at Web3 with a little bit of skepticism? What will be your suggestion for them to start living on blockchain?
I think just dive right in.
Hmm.
I think get yourself a wallet, start using it, see how it works. And doing a couple of transactions, send some send some Bitcoin to your friends and that sort of thing, and really just get embedded in the ecosystem. There's so much information available. This is the beauty of like a decentralized system and community
Mm.
where people are sharing, free research. It's not behind a paywall. You can spend hours down rabbit holes learning about different things and different areas. And then I think the number one thing besides all of that is start with something you're interested in. So I approached blockchain very much from a payments for, FX, fintech, financial services
Mm.
use case. There's people that have approached it from a media lens, whether we're
Right.
doing NFTs or music royalties. There's people that have approached it from art. So I think, approach the space with something that's, of real interest to you, because that will then maintain the curiosity and allow you to go deeper.
Absolutely. I think with curiosity and going down this rabbit hole, it's important that you arm yourself with the right knowledge, but you have to absolutely execute and get your hands a little dirty to understand if this space is for you. So that's very good advice and a wonderful way to close off this episode. Thank you so much, Chris, for making the time to speak to me today. Any parting words before we wrap this up?
Look, it's been a great conversation, Tarusha. I would just leave the audience with, think big, keep
Hmm.
thinking bigger.
Yeah. Wonderful. Wonderful. Thank you so much, Chris.
Awesome.